video is starting. That's what it's telling me. So
Okay.
hopefully it stays that way. Okay, it looks like we're live. So I'll start your theme music. Let me get this recorder.
Okay.
Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency. Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hi, listeners. Welcome back. Today's show is about the Lightning Network and what it means to you. We're going to talk about the intricacies of the Lightning Network and get us all more educated about this platform for cryptocurrency. It's mostly Bitcoin, but crypto's throws a wider net, I guess. My co-host today is Noah Leach, and he will be helping me educate all of us about this. Hi, Noah. How are you doing?
I'm good. How are you guys?
Doing pretty good. We missed you the last couple of weeks. I'll bet it's just great to be back again, huh?
Ecstatic.
Okay, great. Now, I want to make a quick description of the Lightning Network and how it functions as a cryptocurrency network so that the listeners know what we're talking about. And without turning it into a big story, let's get started. Basically, the show today is a modified explanation of the current state of the Lightning Network and the crypto industry. We've adapted and augmented the content, of course, because our listeners have asked for more Lightning information. Today, we'll have a look at how, as a user of the Lightning Network, cryptocurrency could be an economic path to freedom for you. But first, a quick review of Lightning. So the Lightning Network is designed to make Bitcoin transactions as fast and cheap as possible, which is good, right? It's part of a newer class of crypto technology known as Layer 2 blockchains. Excuse me. Which you can think of as being a little like HOV lanes on highways. By offloading some transaction traffic to the Lightning Network's Layer 2 blockchain, the core blockchain for Bitcoin, which is Layer 1, can move faster. Some of the highlights currently are that Twitter allows users to send and receive Bitcoin tips via the Lightning Network. And via the Lightning Network, a Lightning Network compatible payments app called Strike, many of Twitter's 360 million monthly active users can send Bitcoin payments to other Twitter accounts instantly for free. I don't know anybody who's done that. Do you know? You know anybody that uses Twitter for that?
No.
So anyway, Twitter isn't actually the first creator-driven social platform to incorporate the Lightning Network. Substack has allowed Bitcoin payments since late August. Substack is another platform for payments. El Salvador became the first nation to make Bitcoin legal tender, in part because of the desire to save Salvadorans some $400 million annually in money transfer fees. The government-created wallet Chivo is Lightning compatible and designed to enable seamless cross-border payments. As of October, Chivo had consistently been one of the most downloaded apps in El Salvador. And a peer-to-peer exchange called Paxful, which processes millions of dollars worth of Bitcoin transactions in emerging markets and claims to have 1.5 million users in Africa alone, also recently announced it will enable Lightning payments. So the network is growing. There's more and more exchanges and apps coming out to take advantage of that. So now that we've got all that information out in the open, let's talk with Noah and see if we can learn some more. Noah, do you have a description of what the Lightning Network is?
Yeah, it's a scaling solution built on top of the Bitcoin protocol, facilitating near instant payments between users at very low cost. And these are for smaller instant payments. They're not for like the larger payments that you might do. I don't know what the cutoff for that is, for which one would be thrown on the Lightning Network and which one would be on the base layer network. But you do have to own Bitcoin to be able to use it. So you just can't use you can't do like Shiba or something like that on it, apparently. So it's got to be for Bitcoin only on the Bitcoin network on their second layer.
Okay, so it's pretty exclusive. Now, I had mentioned El Salvador there in the beginning intro. El Salvador just recently, now like 4 days ago, they hosted central bankers and financial authorities from 44 countries for a financial inclusion event this week. And all participating members were able to download their own Bitcoin wallets and make purchases with BTC. So they gave them all a wallet and I guess sent them back to their countries. But in July 1944, 44 countries met to determine the Bretton Woods financial system. And once again, those same countries came together to learn a new system. So on May 15, El Salvador President Nayib Bukele announced that 32 central bankers and 12 financial authorities from 44 countries would meet in El Salvador for an event about achieving financial inclusion and banking. Banking the unbanked through Bitcoin's digital economy. And it was hosted by the Central Bank of El Salvador. And apparently this is a big deal for El Salvador and probably for Bitcoin. What do you think of that?
I mean, it's definitely going to be a big deal, but I think it'll really start to take off once it comes to the United States. I mean, right now they're using it. I think they're using El Salvador and Africa and whatnot as testing grounds for.
Yeah, that's probably true. El Salvador's been using. El Salvador switched over to Bitcoin as their national currency, so they probably are pretty much used to how it's working, and I imagine they're just setting up more nodes and Bitcoin card readers or something around the
like
country.
A Visa card or something like that.
Yeah,
I think Bitcoin has those right now too.
Okay, audience, here's a quick reminder. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM /your city, Monday to Friday at 11 a.m. and 4 p.m. So tune in and learn about cryptocurrencies from us. Now, Noah, is there a real need for the cryptocurrency, or not the cryptocurrency, but the Lightning Network?
Well, need and want are two different things, so
right.
I don't really think we need the Lightning Network because normal Bitcoin transactions, commonly referred to as on-chain transactions, are relatively cheap, even if you want a fast confirmation time. Lightning really starts to shine when on-chain fees increase as the Bitcoin user base increases and the block subsidy decreases. Lightning also shows great promise in smaller, more frequent payment use cases for things like unlocking online content.
Mm-hmm.
But, we'll see what it does. I think that this is Bitcoin's way of trying to compete with blockchains like Shiba Inu and BitGert, which are promising lower transaction fees than them, as well as Ethereum and whatnot.
So the Lightning Network's main thing is its low fees.
Yeah, yeah.
Okay.
I think it's also supposed to create, it's like you said, an HOV lane for transactions, for smaller transactions. So you don't have to rework the entire blockchain. You can just create a second layer to take those smaller transactions away, freeing up more resources for the bigger transactions on the main layer. And I think that's a pretty smart way of doing it.
Well, during my research, I saw that the Lightning Network runs on Layer Z, is what they were calling it, and I guess it's what would you call that? Like an HOV lane on Layer 2 of the network.
Yeah, I guess so.
Is that? Are you familiar with that
I'm
at all?
not, but I would guess that would be what they would, the best analogy for it.
Yeah. Okay. So we need to do a little bit more research into that here in the future, because I assume that there's just going to be a lot more of these proprietary layers, for proprietary blockchains, and I imagine that will become a big security deal.
Well, I mean,
keeping them all secure.
Well, it has the same security as Bitcoin, so it's not going to change anything for secure. For the security aspect of things, you should still be able to do it relatively securely. So
Okay. So I don't know where my mind's going right now is all these different layers. Okay, you've got a layer for Bitcoin. You've got a layer for all the cryptocurrencies. They all have their own algorithm, and I don't know if they're all using different layers. I mean, their algorithm probably all runs on, I guess the little little network layer in between. Are they all creating their own? Or
another good way to look at it would be like you have a multi-processor computer, right? You got 6 cores. All right, core 1 is going to be the base layer. Core 2 is going to be layer 2. Core 3, et cetera, et cetera. And then, on top of that, you're going to have the threads, which, like, say you got a 6-core computer, each core holds 2 threads, so you got 12 threads processing. So, I could see, like, Bitcoin, since they're doing the second layer, doing something like that, like they're using the base layer as the first core and then layer 2 as thread number 1, so to speak, so it's just, they're just prioritizing what goes where based off of the amount that you're trying to transfer or pay or exchange or whatever it is you're doing.
Okay. So it's complicated.
Yeah. It's probably gonna get more complex as the cryptocurrency evolves and changes.
Well, that's that's interesting because right now, as I've said before, there's about 17,000 different coins and cryptocurrencies available out there, and so I assume that means we've got close to 17,000 different algorithms going through the pipe at the same time.
Well, that's why a lot of these, a lot of like Shiba Inu and stuff are trying to create their own blockchain. That way they aren't bogged down by Bitcoin or the Ethereum blockchain or whatever blockchain they're currently using. Same with like BitGert and stuff like that. They're creating their own blockchain. Pretty much everybody's attempting to create their own blockchain. That way they can get away from Ethereum blockchain's fees as well as Bitcoin's blockchain fees, and they can try and compete with them because obviously everybody wants a piece of the pie.
Oh yeah, definitely. But my concern is that when you're getting all these things in the pipe, that's going to slow it down anyway. I mean, I guess we need to go to fiber optics or something that'll carry all the traffic.
Oh, they'll just
because because everybody wants their own HOV lane.
Right. Yeah. If they're creating their own blockchain, they'll be supporting their own blockchain, so it won't be on like Bitcoin's blockchain. So that'll actually free up more resources when, say, Shiba Inu gets off the Ethereum blockchain or whatever blockchain it's on right now. I can't remember. I think it's Ethereum.
Yeah, I think it is.
I think the same for BitGert. Once they actually create their own blockchain, that'll free up resources for Ethereum as well, so they won't have to worry about that. Then they can charge their own fees, which we already know are going to be low according to what they've said. But once it finally comes out, we'll see.
We'll see when we look in our wallets how low they are. Yeah, that's what everybody says. So, well, let's see. I guess this would be a good time to talk about how does the Lightning Network work. And, with everything you've told me, I'm confused now. But, how does the Lightning Network work, and how does it fit into all these different HOV lanes?
Let's say that user number 1 opens a payment channel with user number 2 by making an on-chain funding transaction. The size of this funding transaction dictates how much value user 1 can transfer using Lightning. Once the funding transaction is confirmed on the base layer, user 1 is free to transact with user 2 over Lightning as many times as he or she likes, until one or both of them decide they want to close the channel. Each Lightning transaction updates the current state of the channel so that neither party can cheat each other out of any funds. When the channel is closed, the most recent channel state is broadcast to the Bitcoin network, and both parties will receive the relevant balance back to their wallet. So it sounds like they're trying to do something that BitGert is trying to do, where they're cutting out the middlemen of the blockchain and doing a peer-to-peer.
Right. Okay. And that was the original plan for decentralized finance.
Yeah, for BitGert as well, because that's what BitGert's stating they're attempting to do, is create a layer where you don't have to be on the blockchain. You can just directly send the money to the person, kind of like Venmo or Zelle or some cash app like that, where you can just say, all right, here's your wallet address. I'm just going to send it straight to you. You don't have to deal with blockchain fees or anything like that, because you're not on the blockchain. You're just going directly from one person to the other. And then it gets updated on the blockchain after the fact.
Interesting. Okay, so while they're making the transaction, they're not actually on the blockchain?
That's what it's sounding like.
So how do they do that then? I mean,
it's just like, it's like if I were to give you some music over Napster, you're back in the day, you're grabbing it off my out of my wallet, and then I'm grabbing what I need from you, and we're just doing it back and forth, and there's no third party, because that's what they consider the blockchain, is the third party in this instance, especially with like BitGert. They specifically stated that they were trying to make it peer-to-peer, so there's no middleman. Their middleman is the blockchain, so they just want to cut that out, because then it's cheaper. You don't have to do any processing through the blockchain, really. But it sounds like what they're trying to do. The Bitcoin developers are trying to do on their layer 2, make it peer-to-peer. But both of you have to open up what they'd call a channel, mm-hmm. Or you could think of it like a gateway straight to your wallet for each user, and then you request money from user 1, and user 1 pays you. Then later on down the road, user 1 requests money from user 2, and user 2 pays him, and then once you're all said and done, you just close it down and it's gone, and then it gets updated on the blockchain for on the transaction list for everybody to see.
Mm-hmm.
That's what it sounds like anyways.
Okay, so the user 1 and user 2 actually have access to each other's wallets?
Well, they have access to request money. Uh-huh. That's about it. It'd be like me sending you a Venmo saying, hey, you owe me $20, then you paying me, and then after that it's said and done.
Okay, so it's going to be like a Venmo transaction then.
Yeah, I think something like that. That's probably the route that they're trying to go. At least that's what it sounds like. Okay.
So if user 1 decides that they want to pay someone else instead of the previous user to, what do you do with that? How do
I would assume that it'd be the same way. You'd just open up a channel with the next person, and then you can, instead of user 2, you'd open up a channel with user 3.
Okay.
I guess, so, it'd just be like me, like an electronic fund transfer or something,
Okay, so the payment channels can be linked together.
Yeah, I think that's the only way that you can do it.
To find a path to the new recipient.
Yeah.
So does that mean that, that would be anybody that was on that network, okay? I mean, you couldn't...
yeah, anybody on the Bitcoin network, I would assume, because it sounds like what they're doing is they're just prioritizing the size of the payment. So, like, if I wanted to send you $20 in Bitcoin for whatever reason, they'd probably go over the Lightning Network because it's such a small amount. But if I wanted to send you $10,000, it'd probably go over the same Bitcoin. It'd go over the normal Bitcoin layer.
Okay. So, I guess that wouldn't be that hard to do, as payments in excess of some number, $10,000, like you said, automatically get transferred over to Bitcoin.
Yeah, something like that.
And they wouldn't stay on the HOV lane.
Right.
But, Bitcoin's still pretty fast, though, so it's not like it's going to slow it down, is it?
Probably not, but they're probably trying to compete with all these new blockchains that are wanting to come out, offering smaller fees or lower fees or, 0.0001% fees or whatever it is. They got to do something to stay relevant. Otherwise, they're going to lose that market share and it's going to go somewhere else, and then they lose money.
Right, exactly. So it's pretty secure, though, huh? I mean, if you've got that many people working on the network, you've got to have some kind of security.
Yeah, I mean, same security as the normal Bitcoin blockchain.
Okay. So they're all small transactions, but they're still transactions. I know that hackers prefer those big $1 million ones, but not for a cup of coffee. Yeah.
Right.
So I know that that's what El Salvador does. Their little coffee shops and food places have the Lightning Network in them, and apparently it's pretty popular there. So who owns and controls the Lightning Network?
Whoever owns and controls Bitcoin.
Okay.
So
that's Satoshi, and we're not really sure if he's really real.
Just that.
I guess nobody's found him yet. So the information I've got is the Lightning Network is completely open source and not owned by anybody. So I'm wondering what the open source means. Well, I guess they still have their own algorithm, even though it's open source.
Yeah, even though it's open source, they still have their own algorithm, but that just means that people can copy and paste into whatever they want if they want, I guess, and then make the changes as needed for their own blockchain. But, that's nice that they're doing that. They don't have to.
That makes it pretty adaptable. If they can just cut and paste code in there. And
yeah, they're probably trying to make BitGert obsolete.
Yeah, they could be. I don't have that much experience with BitGert. Are they... They're another blockchain, okay, to start off with. We talked about them a little while ago, but I haven't heard anything new about them recently, especially with the current volatility going on around the blockchain or cryptocurrencies in general on the market. So is BitGert? They have their own blockchain. Are they off of Ethereum or?
I think right now they're off of Ethereum, and then they're supposed to come out with their own blockchain pretty soon.
Okay. Do you know what that's going to be running from or running off of then?
I would assume. Oh yeah, the name of the coin is Bryce, but the blockchain's called BitGert, so it'll be running off their own blockchain.
Okay. Well, that's pretty good. It says here that anyone can run a node and participate in the Lightning Network completely permission-free. And Also, there's lots of different implementations of Lightning, which include LND, C Lightning, and Eclair. All of these implementations are almost 100% interoperable. Are you familiar with any of those? I
am
hadn't
not.
heard
I
any.
think that's more on the programming side.
Yeah, C Lightning sounds like they're using the C language.
Yeah, C++ or something like that.
Yeah,
C
yeah.
sharp, something.
And let's see here. So, okay, that's not the one. So I got a little bit of a thing here. So, are there miners on the Lightning Network?
No, there's no miners right now since it's still on the Bitcoin base layer and keeps all the same security features. The minimum fees you pay on Lightning go to network participants who form part of the route your payment takes, so it could be literally anyone running a Lightning node.
Okay.
So, yeah, you could do a node, and then that'd allow you to make some money, as long as it's up and running.
So how would you set up a Lightning node?
I'd have to look into it. I'm not too sure. I'm sure that there's probably a program that you'd have to run on a computer somewhere, and that program would probably have to be running 24/7 in order to make the most money.
Sure.
And then you just have it. You'd pretty much be running a processing center, a little itty bitty processing center for your processes, which might actually make you some money over the long term, but short term it'd probably not be worth it.
So what is a node like? Can you run a node just off of one computer? Or
yeah, you could. I mean, the more nodes you run, though, the more chances you have to make money, So, like, you could get, like, 3 or 4 cheapy computers, connect them to your internet, and then download the software and let it go. I would assume that it's a piece of software that all you got to do is keep running 24/7, 365.
Okay. So, cheapy computers we got, right?
Right.
So
those ain't hard to do.
Yeah. I wonder if they'll run on Chrome. I've got 4 Chrome computers at home. So
it might. I mean, Chrome's based off of Linux, so it should. I don't see why it wouldn't, but you'd need to keep them plugged in 24/7, 365 to the internet as well as to the wall so they don't run out of power.
That's an interesting concept. So if you had the node as an app on your computer, you'd be able to process transactions, I guess, right?
Yeah.
So that shouldn't be that hard to do. I know that the Lightning Network's coming to the United States. It's not here yet. I guess in probably previous mode. We're getting ready to do the update to when the actual app and everything gets put together here. Right now they're real big in the UK, and I think that's where it was set up. And I know that one of the apps that runs on the Lightning Network is called Kraken. Are you familiar with that?
I've heard of it, but I haven't used it. I know that they're big over in I think Japan as well. Kraken.
Are they?
Yeah,
Okay.
I believe so. If I remember correctly, I think Kraken's the Japan one that's huge over there.
Well, they I'm sure that they are big in Japan because I know that they're big in the UK, and I know that from what I hear, using the app is kind of cumbersome, and that somebody said that you need to have a picture of the transaction to get it to go. And I don't know how you would actually do that.
I have no idea. I haven't heard about that at all. But
that's a different one. But I know you can download Kraken here in the United States.
Yeah.
So you can use it for other apps. I mean, other cryptos, I guess. It's not exclusive to the Lightning Network, but it is coming. And we have heard from the owner of the Lightning Network that they're trying to come over here. Okay, listeners, we're gearing up for our advertising blitz, and we'd like you to listen to all the ads and even possibly buy something. How's that? So we'll be back in about 5 minutes or so listen to the ads and have fun.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information. And don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit PublishingConceptsLLC.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Well, welcome back, listeners. If you're now just joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM /your city, and you can pick us up on the internet radio Monday to Friday at 11 a.m. and 4 p.m. So for more information, you can call me at my office number is 314-781-7612. And that number again is 314-781-7612. Or call the 800 number, which is more fun. It's at 877-212-1400. And that number again is 877-212-1400, or visit our website at https://ccodweb.us and leave us a message. So our discussion today is a beginning course for people that want to be educated in the world of cryptocurrency. And that's the point that we're trying to get across anyway. So let's continue our discussion about the Lightning Network, and wanted to get to the part about what are the downsides of the network.
Well, liquidity management right now is kind of an issue since it's relatively young. So if you do use the Lightning Network, every now and again you might have a failed transaction, but all you got to do is resubmit it, and hopefully it goes through that time. It's all because of the fact that they still need, money in the system. You got to get more nodes, which creates more liquidity, I'm sure, and then you can have less failed transactions. As the system or the Lightning Network becomes more reliable, more people are gonna start moving to it and trusting it. And I wouldn't be surprised if Bitcoin just automatically started sending smaller transactions over there.
Over to
over to the Lightning Network, which
Okay.
sounds like what they're trying to do anyways, but I'm not sure if you still have to use it directly or if they just automatically put it on there. I don't know. But
Well, the way I understand it in El Salvador that has the Lightning Network set up, basically it's just like using a Visa or MasterCard. You just have a Lightning
a
Network
debit card or
Yeah.
something like that.
and you
Yeah.
just run it through, and it automatically goes to the Lightning Network. And so I guess you have two card readers. You got one for Bitcoin, one for Lightning Network. So
Yeah.
they're separated, and the Lightning Network is supposedly faster and for smaller transactions.
Yeah.
Is the way I was understanding it. So you said that liquidity management can become tiresome, and I'm wondering what do you mean by tiresome?
Well, it takes a lot of resources to do something like this. You just don't make those resources available immediately upon creating the layer for Lightning Network. Somebody has to put money in there, right?
Right.
And since some of the fees of the Lightning Network are going to the nodes, the node runners, then you're not creating too much liquidity because some of that money's being given to people for their time and effort of running a node. Or
Right.
2 or 3 or whatever they're doing.
So
that creates issues when you don't have a whole lot of money, Like if you were to create your own blockchain today, you'd have to put up some substantial money in order to create some liquidity in it. And the way you do that is by getting investors or other people involved in the program, right? Like I could create a coin today, but it could have zero use and nobody would buy it and there'd be no liquidity in it. So if somebody did buy it, then cashed out and it went up a little bit, cashed out, I'd be out of money. You know what I'm saying?
right.
So it'd be, it's pretty much akin to the services that your bank provides and its corporate customers, thereby allowing them to optimize interest in their checking / savings accounts and pool funds from direct accounts from different accounts, not
So
directed accounts.
is that I guess we could say that's kind of what happened to Luna when they had a liquidity problem because I guess the network was looking for more than 10 billion and thought there was 40 billion in there, and there was 30 billion missing. So is that kind of what you're talking about, the liquidity management?
Yeah, a little bit. I think that had to do also with the crypto crash that's happening right now. Like if I remember correctly, Luna was also tied to Bitcoin, and when Bitcoin tanked so hard, people were pulling their money out. Mm-hmm. And same thing with Coinbase. Coinbase had $285 billion worth of crypto in other people's money, and they were talking about bankruptcy for Coinbase, even though Coinbase was like, oh, we're not going to get bankrupted. But, as people normally say before they go bankrupt is, oh, we're not going to go bankrupt. Oh, no, that's a lie.
Exactly. Exactly.
So I'm not sure what Coinbase is doing now, but they've lost a lot of money. And I mean, when you have $285 billion worth of people's money and then all of a sudden the market crashes, where's all your money going?
Right.
They don't have the money to back that up. Mm-hmm. So, they can't stay afloat because, well, everybody's pulling their money out. So,
right.
If you don't have other people's money to make money off of, they're like a big bank, pretty much,
Yeah.
They make money off of your money.
Yeah. And when there's a run on the bank, things get rough.
Yep.
Exactly.
Yeah, it's just like what would happen to our economy if we couldn't pull money out of the banks because the banks ran out of money. Mm-hmm. It'd be the same thing.
Yeah. What is let's see what Coinbase is like today. Coinbase stock, I guess, would be the one, huh? So Coinbase is down a little. It says here 5.72 today, but apparently they're still there. So they haven't gone anywhere yet. But the graph is showing that they're down.
Yeah, as soon as the market rebounds, they'll be okay, but they got to survive first.
Right. They got to survive. And I don't know they're not the only ones like that, though. I mean, there's who else is kind of like Coinbase?
Luna. Well, I mean, Luna went from, I forget what it was, but it was like, I think in the hundreds of dollars or, something like that.
Yeah, Luna was up around, it was up around 150.
Then it was, then when the market started crashing, I saw Luna tank down to like $10, and then the very next day it was down to less than a quarter of a penny.
Right.
Like, I think it was actually like 1/100th of a penny, and I'm like, that's a hard crash.
That's a real hard crash.
Yeah, the people that had their money in Luna got wrecked. I mean, is the only way to put it. They got destroyed.
Yep.
All your money's gone pretty much, and if you bought in towards the top, you just lost all your money. It's gone,
Yeah.
And I haven't seen it bounce back yet. In fact, I can probably look right here. Let's take a quick look at Webull.
Well, this morning, I got a message that they were up 4.5% or something like that. But when you're down below a quarter of a cent, I don't know how many people
right
are
now
interested.
they are currently at 0.0001500.
Okay, so that's what, 3 zeros?
Yeah.
3 zeros in front of.
So they're at about 20th of a penny or somewhere around there.
Huh?
Yeah, from their all-time high of $119.55 for the 52-week high. So that's that is the crash right there. That's what people are hoping would happen to like Bitcoin or something. That way they could buy in again because it always goes back up, right?
Right. That's a good point. Do you think Luna's going to come back?
I think it's too early to tell, but if they haven't started rebounding yet when Bitcoin bounced up, then I'd assume no. I'd assume that it's probably a dead project.
Yeah.
We can see the cryptos right now.
I guess they did go up a little when Bitcoin went up.
Well, Bitcoin's at 28,000 now, and Luna didn't really move that much, so I'd have to assume that they ain't doing much. They're down 3% for today already, so.
Yeah, well, Do Kwon is in a lot of trouble. the guy that wrote the algorithm for Luna. Apparently, the South Korean Securities and Exchange guys have called him into the office to get him on the carpet about what happened, and he's also been fined $178 million for, I don't know exactly what it was for. I think they fined him once because of the crash, and then he didn't pay the fine, which was he was supposed to pay 178 million, and he didn't pay it, and it looks like they fined him another 178. So that makes a lot of sense.
Yeah.
If he doesn't have the 178 million,
Fine
why
him another
fine
178.
Yeah, I mean, like, how's he going to pay that? It's kind of like the same thing where they throw you in jail for child support because you didn't pay the bill, and it's like, and then they're after you every day. You're going to pay the bill. How am I going to pay the bill in here?
Right.
So he may be in a pretty bad spot for a while. I guess we're going to find out about that.
I mean, if you don't mind losing money, you could always throw $10 in there, get a couple 100,000 coins, and see if it ever takes off again.
Yeah.
And then make some easy money. I mean, hey, if you throw $10 in it and get a couple 100,000 coins, and then it turns around and jumps back up to $1, you've made you made some money. So,
Yeah.
You can't hurt. I wouldn't suggest it, but it can't hurt. If you don't mind losing money.
Yeah, exactly. So I guess that's going to be a big subject here in the future is liquidity management. That's probably something you should look at after you read the white paper of your favorite coin that you want to invest in.
Right.
Is how do they manage their liquidity, because that could be a factor in whether they crash or not. And anyway, so the one question I wanted to ask was, do I need to use a node to access Lightning? But I guess we talked about that.
Well, much like Bitcoin, you really don't need a node, but it is advisable. If you aren't running your own node, then you're relying on somebody else's node, which means that you're probably going to end up paying them a little bit of a fee for the transaction.
Okay.
But you're probably going to get charged a little fee anyways, but at least it'll be a little bit less if you're running your own node.
So if you're just using the app, you're probably going to get more fees.
Probably a little bit, yeah. I could see if you're using your own node off of your own computer or whatnot, that you could probably pay a little bit less because you wouldn't have to pay somebody else to do the processing of your transaction.
Yeah, the legwork. Yeah. Okay. Well, that kind of makes sense. Now, one question that I'm kind of watching, it's kind of a favorite of mine, the future of government regulations for Lightning Network and other networks like it. What do you think is going to happen with that?
Since the network is so new, I don't know what regulations they might come out with for that specific one, but for the others, I could see them trying to regulate the cryptocurrency market like they would regulate the stock market, or something like that, and so pretty much only the rich people will be able to do anything with it.
Well, yeah, that's the question. That's the answer I keep seeing. Like, all this stuff isn't going to bother the rich very long.
Nah.
Because they've got the money. Their money channels are pretty well set. So no matter what the crypto market does, they're going to have money coming in. And even if it is dollars that are not worth as much because of inflation.
Right.
But I guess we're all in the same bag on that one. So.
Yeah, I just don't see. I honestly don't see regulation working real well for the crypto market because of the decentralization of it, unlike the stock market where it's all centralized. But who knows what the government could come up with? If the government's smart, they'll open up their own coin on their own blockchain, and then regulate that and anything that uses that blockchain. You know, I could
Yeah.
see them doing that because then they could centralize it, but they can't regulate the entire market because it's all decentralized. You know, there's too big. It's worldwide. You can't regulate something in the UK or in Japan or something like that. You can try for regulating everything inside your borders, but as we see, that doesn't work out too well for things like drugs or gun running or
right.
stuff like that. You know,
Yeah,
so
they haven't been able to regulate that.
can't even
So-
regulate the stock market properly right now. So.
Well, you know, I've been asked a couple of questions about. I guess this is getting a little bit off the subject, but for instance, Luna is based on Bitcoin. Okay, so whatever Bitcoin does, going up and down, but a lot of the other stable coins like Luna are based on the U.S. dollar.
Right.
And so that's what they're using as their what is that? What do you call that? The primary value.
Yeah, the value indicator or whatever.
Yeah, the value indicator as you know, the indicator for the decentralized finance. If you want to borrow money or lend money, that kind of thing, you need to have a stable coin in between there to make it all work. So, but a lot of people are asking, you know, since cryptocurrency is an attempt to get away from that basic system of dollars and euros and all that, why would you base your stable coin on a dollar? Because that's what if you're going to get away from it, then why don't you just have a different stable coin based on something else? And so I kind of was wondering that. If you got any ideas about that?
I do. I think it's because the USD is strong. So, like,
Right.
you know, like, it's not going to go anywhere. You know, you don't have to worry about it. But obviously, when things like this happen, inflation and stuff like that, in the normal market, you're going to see people get scared. And that's what happened with Luna, is that they tanked. More than likely, a lot of people pulled out their money. I mean, the crypto market itself has tanked a huge number. I mean, we haven't seen a tank like this in at least 10 years, you know?
Mm-hmm.
So, with that being said, you know, and everything tanking, even though Luna is based on the USD, you know, they still they're still tied to Bitcoin, just like Shiba is. Shiba tanked too, you know. They dropped at like a 1,000 to 2,000 points, you know, so they're currently lower than Luna on the, you know, Luna's slightly higher than Shiba, which, you know, being $119 a coin is a huge drop for them. But for Shiba, it's not that bad because, well, they were only at like 2,000 or 3,000. You know, like what was it, like 1/20th or 1/30th of a penny? You know?
Yeah, they were
So
never.
for every dollar you get like 2,000 or 3,000 coins. Now, you know, they're down to like 1,000 where Luna's at 1,500. So
Yeah.
you know, but yeah, I think that's why a lot of people did that, or I should say a lot of coins did that, because, you know, if you base it off of a currency that everybody already uses, you have a better chance of people actually buying it and using it. You know what I'm saying?
Mm-hmm.
You know, just like Zimbabwe got rid of the Zimbabwe dollar because of hyperinflation and went to the US dollar. That way they had a working and functioning economy, you know, where you didn't have to spend $1 billion of Zimbabwe money to get one loaf of bread,
Right.
you know. So I think people did it, or, you know, coins did it for the same reason that Zimbabwe did it, you know, to make sure that they had a functioning coin/economy.
Okay. I wasn't. I'm not familiar with Zimbabwe doing that.
I think that happened in the early or mid 90s. You know, they had a terrible economy and hyperinflation set in, and overnight people couldn't afford bread because bread was like 10,000 Zimbabwe dollars or something like that. And, well, people in Zimbabwe aren't that rich, you know, or at least the vast
Right.
majority of them aren't.
Right.
So their economy collapsed and they had to switch over to the USD. So,
Okay. So how do you work something like that? They're in Africa.
I have no idea. I mean,
That's,
that was between them and the U.S. government, but they got it done.
Okay. So, as far as regulations go for cryptocurrency, have you heard anything new about what the government wants to do?
Nah, I mean, as per usual, the government likes to talk big, kind of like Elon Musk. They like to talk big and then create all this volatility and then turn around and be like, we don't know.
Yeah.
Pretty much that's what they're doing. They're, trying to scare investors and stuff like that. That's how I feel about it anyways, especially when it comes down to like people like Bill Gates saying, oh, it doesn't have any use. Well, neither did Microsoft in the 1970s and 80s, but yet here you are.
Yeah, here you are, right?
Shoot, you're a multi-billionaire now, and I mean, when Windows first came out, nobody really had much use for it,
Yeah.
because it was so new. It took you decades to get to that point. But thank you for your input, Bill Gates, multi-billion-dollar guy that shouldn't even care about it.
Yeah,
But
you'd think so. I know. Let's see, with Elon, his Tesla stock is way down. It's down
well,
30,
that's what
30%.
happens when you sit there and say things like, "Oh yeah, it's overvalued." He said that his own company was overvalued, and I'm like, well, okay, I guess he doesn't care because he has $200 billion. What does he care if it goes down 30%? He don't care.
Yeah.
Then same thing with Twitter, he's like, he changed his Twitter his offer to buying Twitter. He said if the bots on Twitter are around 25% or something like that, he's like, oh, I think it'll be worth about $11 billion, and that'll be his offer. From $44 billion.
Right. And, I thought about that, about him and the bots, and I thought, he knew that going in.
More than likely, but
he
I
had
mean,
to. Yeah, I think anyway. So
Twitter said that it was only 5% of users, and I'm like, no way, it's 5%. You have like 1 billion users or something like that, and like 300 million daily users. I'm guaranteeing that it's over 5%. Because people are those bots just create accounts, and as they get banned, they just create a new one automatically. It's not,
So you can't ban the bots?
Yeah, I guess you could with something like that, but with like a CAPTCHA or whatever the heck they call it, a CAPTCHA, the little thing that you got to click on and type in the numbers or whatever that prove you're not a bot, but even those don't really work that well.
Yeah. The CAPTCHA, the reCAPTCHA and the CAPTCHA and all that stuff.
Yeah, that stuff.
Okay. So let's see here. I think I should give out our tip of the day if I can find it here. I researched this and wanted to let you know when you're working with crypto, just like when you're working with stocks and bonds and all that kind of thing, you need to be careful. Okay. And being careful means that you should diversify your crypto portfolio. It doesn't pay to have too much invested in one single cryptocurrency, or as they say, don't put all your eggs in one basket. As with stocks and shares, spread your money out among different digital currencies. This means that you don't risk being overexposed should one of them plummet in value, especially as the market prices of these investments are highly volatile. There are thousands to choose from, so do your research. Make sure that you read the white paper on each cryptocurrency that you want to invest in, and find out where the developers are finding the value for that currency. And if it's something that you like, then think about investing in it. We can talk about what the best blockchain is for beginners later. We're actually kind of running out of time, and wanted to just get that tip in, the tip of the day. So everything that we've said today is, talking about our platforms, cryptocurrency platforms, and the inbound liquidity that you have to get those things going. That's a measure of how much cryptocurrency you can receive over your network, whether it be Lightning or Ethereum or any of the other networks. if you simply open a channel, someone initially you can send only that type of currency.
Yeah.
So here we are, listeners. We're signing off for the week, I guess, and want to wish you a great week. This wraps up our show today. We hope you enjoyed the new show, and tune in next week when we continue to explore the world of cryptocurrency. Have a great week again, and remember, don't take any wooden crypto.